Is Solana actually dead, or will it start to recover in 2024? Solana was one of the top performing cryptos in the last bull run, but since the FTX implosion, it has been on a consistent decline. Today, we will dive deep into Solana from an unbiased perspective. We will cover the bearish effects it has left over from FTX, but also the unique technology and ecosystem adoption it plans to achieve in the next few years. Make sure to watch till the end because I will give you my full price prediction for Solana by the 2025 bull run peak. Welcome back to the VirtualBacon channel. My name is Dennis. I'm a crypto angel investor that have invested in over 100 companies, and on this channel I share my views on market trends and investing strategy to build wealth in crypto. From a peak price of $258 on November 6, 2021, Solana's SOL token has declined to just around $9 at the very bottom. Today it sits at $19, which is still a 95% drop from the top. The total value locked in DeFi protocols on Solana has declined even more dramatically, from the very top at $12 billion to today at only $500 million. In fact, for the past 10 months, the DeFi ecosystem on Solana has not seen any growth. The single largest drop in metrics on Solana happened in November 2022 during the FTX collapse. $1.2 billion of money flowed out of Solana within a few days. So why was Solana so heavily influenced by FTX? In 2021, Solana raised nearly $300 million through a private token sale, and one of its largest investors was Alameda Research. It was later revealed that Alameda Research was essentially the same entity as FTX, sharing their funds and investments. This is why during the FTX fiasco, there were rumors circulating that the FTX exchange was offloading its assets, including Solana holdings and all of its ecosystem tokens. How many Solana tokens did FTX hold? We do have the full data on this. FTX held both locked and unlocked SOL tokens, with a combined value reaching over $1 billion today. And this is not new. Right after the FTX collapse, the Solana Foundation published an official article outlining their entire deal with FTX. You see on this table, they have sold a total of around 58 million Solana to Alameda and FTX. At today's value, that's worth just around $1.1 billion. The latest accounting of FTX liquidations shows that FTX still holds around 42 million Solana tokens that they can sell, which is worth around $720 million at today's prices. And just last week on September 13th, the US courts officially gave FTX the green light to start selling their billions of crypto holdings for their bankruptcy claims. You might have seen this news recently. The FTX liquidation event has caused another major fear in the Solana community. However, these tokens cannot be dumped on the market in one go. They still have to follow an unlock schedule which lasts for the next 5 years. But before we get into the full tokenomics and unlock schedule of Solana, let's first look at some of the other major concerns people have around the network. Concern number one is around centralization. Solana has earned the reputation of being a centralized chain, but really, can any single entity shut down Solana? Solana uses a consensus algorithm called proof of history in order to process transactions. This is based on stake-based voting, just like other proof-of-stake blockchain. However, the top validators on Solana do control a large amount of the total stake, which does give them certain power over the network. According to most of the block explorers, Solana has around 2,000 validators today. But out of this 2,000 validators, the top 30 validators already control over 33% of the total SOL stake. This is the threshold of stake required to make transactions on the network, which means if these 30 parties came together, they can choose to halt the network. To be completely fair, these validators' numbers are about the same as other proof-of-stake blockchains in the industry. BNB chain, for example, only requires 29 validators out of the total 53 in order to make decisions. Polygon has a total of 103 validators, but also you don't need all of these guys to come together to make transactions. Phantom has 58 validators, and also majority of the stake are controlled by the top entities. I think the most decentralized competitor out there is probably Avalanche with 1,300 validators, and a large portion of these validators have all large stakes because there is a cap to the stake amount. But all in all, I wouldn't say Solana is more centralized than other proof-of-stake blockchains out there, just based on these metrics. Concern number two is around performance. People say Solana always shuts down, but is this still true? In 2022, Solana had 7 total outages. In January, it even had one whole week of degraded performance. So yes, Solana's performance was terrible in 2022 compared to other networks. It's worth noting that most of the downtime was not due to centralization or attacks on the network. Rather, they were mostly performance issues related to the consensus algorithm. According to the network report, the April outage was due to an enormous amount of inbound transactions, roughly 6 million per second, which flooded the network. Some evidence suggests that this was bots programmatically trying to win a new NFT auction. The outages in June and September were due to bugs in the consensus software, which temporarily forked the network. This is important because software performance issues can be fixed as long as the underlying consensus and network validators are honest and secure. And it seems they have fixed most of the problems in 2023. There was only one network outage in 2023 happening in February. And for the past 7 months, the network has been functioning smoothly. This is definitely an improvement over 2022. While the network can still go down once per year, in fairness, this is similar to other layer 2 networks like Base and Arbitrum, which have both gone down once this year. I think the current performance of Solana is acceptable among other networks, and it's no longer fair to say that Solana has worse performance than other blockchains. In case you have never tried Solana, I want to show you some real transactions to see how fast it takes. Here's Orca, the leading decentralized exchange, and let's say I want to sell a little bit of Solana for USDC. Here's the transaction, just like MetaMask, and you see the cost is 0.00002 Sol, or basically 0. Confirm, and right away the confirmation goes through and you see our balance has updated. And also in the wallet, you see I have the USDC here. Here I'm going to try with an NFT transaction. So just buying one of these random NFT collections. Let me click to buy now, and the pop-up shows up. And you see the network fee is 0.00001 Sol, or basically nothing. Click confirm, and after a couple seconds the transaction goes through. And then let's go into my items, and you see this item that we just bought, this NFT, is in my wallet. As you can see, the transaction fees are indeed much cheaper than even Ethereum layer 2s, and the transaction confirmation is instant, whereas on other layer 2s, it will take 10-15 seconds depending on which network you're using. One other major area that is hurt by FTX is the DeFi ecosystem on Solana. Apart from their investment, FTX was also a major player in developing the Solana DeFi ecosystem. We already saw what happened to the TVL numbers on Solana right after FTX went down. And these were some of the issues that plagued the Solana ecosystem. Number one, wrapped tokens issued by FTX were no longer redeemable, and thus they all lost their peg. For example, wrapped Bitcoin on Solana was controlled by Alameda and FTX, and with the collateral gone, the wrapped Bitcoin is trading at a huge discount and there is no liquidity, meaning these are all dead. Other DeFi protocols such as Ren also had to shut down as they were fully owned by Solana. And in April, they were forced to transfer all their assets to FTX debtors for bankruptcy proceedings. Serum, the largest decentralized exchange on Solana, also had its upgrade keys controlled by FTX. This meant that the developers could not work on it anymore or upgrade the smart contracts, so they had to fork to a community version. One interesting metric to note for Solana is that even though the DeFi protocol TVL went down in 2021 and 2022, the active user count actually continued to go up and peaked later on in 2022. And even today, Solana is averaging around 100,000 daily active users, which is about the same as late 2021 and much higher than early 2021 metrics. This divergence between the TVL number and the active user count shows that Solana is moving in a different direction from a DeFi heavy focus in 2021 to a more mass retail focus for the next cycle. So why is this divergence happening, and how is Solana positioning itself as a retail focused mass adoption chain? Solana's mission has always been clear. It wants to be a super fast blockchain that uses a unique consensus algorithm to provide near instant and near zero cost transactions. So how fast is Solana today compared to other blockchains? Is it really that big a difference? Solana can process around 5,000 transactions per second. However, this is not the most important number, as other layer 1s and layer 2s have similar TPS numbers. The real advantage of Solana lies in its practically zero cost and instant settlement. You see, Solana transactions cost below 1/10 of a cent, whereas other cheap networks like Binance Smart Chain, Cardano, Even Arbitrum, Optimism, Polygon all still require around 10 cents in gas fees for one transaction. This difference is much more apparent in a bull market. When fees started to spike up on Bitcoin and Ethereum, they reached over $15 for transaction fees. However, on Solana, you see it has always been flat on the bottom, which is below 1/10 of a cent. Solana also has the shortest transaction settlement at only 400 milliseconds, and it only requires one block to finalize. The closest competitors would be Avalanche at 2 seconds and Near Protocol at also 2 seconds. However, when you look at Ethereum and its layer 2s like Arbitrum, Optimism, or Polygon, they take much longer. These range between 3 minutes and even 20 minutes. So even though the transactions go through, they are not fully confirmed. You have to wait till 300 blocks on Arbitrum in order to count any new transaction. The cost and settlement time difference are not noticeable for a DeFi application, as you only need to swap once every few days. But they are a make or break factor for high-frequency retail application. If you build a social media app on Solana, you can essentially make transactions all free, since you can subsidize all the gas costs without breaking the bank. And the 400 millisecond settlement time will have a user experience similar to a Web2 application. You click a button and it automatically completes. However, if you build the same social app on a layer 2 network like Arbitrum, the user must have at least 10 cents to make any post, and they have to wait 5 minutes before their post gets fully published. You see the difference? Even though Solana cannot beat Ethereum in the DeFi arena, there are other areas that Solana is heavily pushing towards in the next cycle. In order for Solana to have a real future, they have to focus on entirely different use cases that Ethereum cannot support. These are namely non-financial use cases that require zero cost and instant settlement. So let's explore some of the mass consumer use cases that Solana is pushing towards for the next few years. Number 1 is the Solana Saga Phone and its Solana mobile stack. Solana aims to provide a comprehensive toolkit and Android build environment that simplifies building mobile-first decentralized applications. And with this, they launched their own Saga Phone on May 8th, 2023. This is an Android phone built by the same team that was behind the Essential phone back in the days. Aside from the typical Android features, it has 3 other crypto functionalities. Number 1 is the Seed Vault, which is built into the secure chip of the phone, making it like a hardware encrypted wallet that is much more secure than any software mobile wallet. Essentially, it's a hardware wallet built into your phone. Number 2 is a decentralized app store. This is a store that specifically lists crypto applications. Currently, there are over a dozen applications supported on this store covering trading, NFTs, and DeFi. But right now, it only supports Solana ecosystem. I would be much happier if they open this up to support other blockchains, including Ethereum and the EVM stack. Number 3 is the Solana mobile stack, which aims to integrate crypto features into the hardware and software of the smartphone. Combined with the secure hardware chip, it aims to provide sending, receiving, and trading of crypto all on the device in a super secure way. The biggest tech YouTuber, MKBHD, has also covered the Solana phone. I recommend you to go watch the tech review for the phone itself. My initial thoughts on this phone is that it definitely isn't built for everyone. I think the software stack and the dApp store is a more exciting idea than the hardware phone itself. And Solana did announce that the mobile software stack and the dApp store will be rolling out to other Android phones. This can help facilitate developers to create mobile-first apps using Solana, but on their own phones and on their existing devices. This mobile-first approach could be the first area for Solana to make a breakthrough. Most decentralized applications today live on the desktop browser using MetaMask, so targeting a mobile app store could bring in a new wave of retail users. Solana apps will have a true mobile experience. The next area of adoption is called Solana Pay. Essentially, it's a platform that allows online merchants to easily accept stablecoins like USDC using the Solana network. And it takes advantage of the instant settlement and near zero gas costs of Solana to facilitate microtransactions. Solana Pay has some major e-commerce integrations. It is live within Shopify, providing millions of businesses on the platform to use it for payments. Solana is also one of the first blockchains supported within Stripe's fiat to crypto payment on-ramp. This integration allows users to easily buy Solana and its ecosystem tokens using fiat currencies, all within Stripe. In April of 2023, Solana partnered up with MasterCard to build a crypto credentials standard. This initiative aims to build trust among consumers, businesses, and governments within the blockchain sector. It's a bit vague, it has to do with compliance first, but I wouldn't be surprised if more integration comes for Solana with MasterCard. On the other hand, Visa has a much more direct integration with Solana. Visa has already moved millions of USDC stablecoins between partners using both Solana and Ethereum blockchains as settlement. Later in September, Visa even published a research article specifically highlighting why they chose Solana. They said that Solana's blockchain network has attributes like transaction throughput and scalability at low cost that help make it a good candidate for payments and Visa's stablecoin settlement pilot. They highlighted Solana's low fees even during the market peaks and their instant transaction settlement around 400 milliseconds, which is much faster than other blockchains. The narrative for Solana Pay is clear. It is the cheapest and fastest network by far, with 1/10 of a cent in gas fees and 400 milliseconds in settlement. This is why it's the top choice for microtransaction payments that only cost a few dollars at a time. In the future, Solana could be the main network for handling USDC stablecoin payments for all online merchants. The last major area of adoption for Solana is in DePIN. DePIN stands for Decentralized Physical Infrastructure Network. There are projects helping orchestrate the physical network around us. Think about cloud computing resources like hotspot sharing, GPU power with graphics cards, or internet upload or download bandwidth. You can share all of these using crypto network. Traditional infrastructure usually follows a top-down approach. A central entity at the helm will control all of the network and take away all of its revenue. This cuts into the infrastructure provider's earnings and also reduces the available resource on the entire network. You might have heard of Helium Network, which lets people host decentralized 5G hotspots and earn crypto. Or perhaps Render Network, which is hot in the AI niche. This is a project that lets people lend out their GPU power to earn crypto. Theta Network is also popular. People can earn coins by sharing their computer power for video encoding and streaming, which is then used for encoding online streams, media, and other entertainment. The reason we mention these projects is because the top DePIN crypto projects are all migrating to Solana. Helium has successfully migrated to the Solana blockchain as its layer 1 in April of this year. This move aims to capitalize on Solana's scalability, low transaction costs, and high performance. And also the Solana Phone is part of the reason they migrated, which will help bring their IoT networks to mass adoption with this built-in device. Render Network has also migrated to Solana. Originally, the Render Network was built on top of Ethereum as the coordination network. Then they switched over to Polygon, but still found that the high transaction fee and long settlement time is still not ideal. And thus, Render also decided to migrate to Solana. And lastly, I think Theta Network might also be considering this. A bit of early alpha I found on this interview between Raoul Pal and Solana's founder Anatoly. He mentioned that the Theta Network is also considering migrating to Solana and ditching their own layer 1 blockchain. There isn't any public announcement yet, so maybe this is an early leak that is directly coming from the founder. If Theta also migrates, that will make Solana the #1 choice for DePIN platforms in crypto. 3 of the top DePIN projects will be running on the Solana blockchain. If DePIN takes off with the decentralization of cloud resources for AI, this could make Solana the only blockchain capable of handling these transactions at large scale. Okay, now let's get into the big elephant in the room, which is Solana's tokenomics. Is Solana at risk from the FTX liquidation? What will happen to all the Solana tokens that FTX holds in the next couple years? Here are the real numbers. Even though the US courts have approved FTX to start selling its crypto holdings for bankruptcy, the large amount of Solana they hold cannot be sold in one go, but rather over the next 5 years. On the official report outlining how much Solana FTX holds, they have the clear release schedules here. Notice how these tokens will be released linearly every month from September 2021 to January 2028. And the only large unlock schedule is on March 1st, 2025, where 7.5 million Solana, worth around $140 million, can be sold in one day. This data also exactly match the on-chain analytics of Solana staking. You see this linear unlock schedule that gets gradually released until beginning of 2028. And the only major jump happens on March 1st, 2025, with 7.8 million Solana unlocked in one day. This matches the original release schedule exactly. The last chart I want to show you is the current number of all locked stake on Solana. There is currently 56 million of Solana in locked staking, which could be coming to the market in the next 4 years. 42 million of these coins belong to Alameda. And you can see all of their wallets down on this page. The top 3 wallets of locked Solana staking, and these can all be tracked public on the blockchain. These matching data gives me a lot of confidence that the Solana tokens cannot be sold and are actually locked on chain. So how much sell pressure does this equate to actually? If we use the total amount of 56 million divided by 51 months until beginning of 2028, that gives us 1.1 million Solana to be unlocked per month, which is worth around $20 million. Now, Solana has about $10 billion in trading volume per month, so 20 million is only 0.2% of the monthly trading volume. This puts things into real perspective. These charts you see on Twitter highlighting that there is a huge unlock of Solana worth 81% of the volume, this is simply not true. Yes, there will be some long-term sell pressure coming from this FTX liquidation, but the overall effect will be just like any other token with large early investors. They account for a very small amount of the volume and will last for a very long time. The total supply of Solana is 550 million today, and 410 million, or about 73%, is already circulating. This is relatively healthy compared to other layer 1 blockchains. For example, Avalanche has 430 million in total supply and 350 million, or around 82%, is circulating. And if you compare the inflation schedule of Solana versus other blockchains, it actually has much less sell pressure than newer projects. Over the next year, around 29 million Solana will come to the market, worth around $550 million. For Avalanche, around 75 million Avalanche tokens will come to the market, which is worth around $690 million. And some of the newer projects like Arbitrum, the leading layer 2, actually has way bigger inflation. Over the next year, 1.75 billion ARB tokens will come to market, worth around $1.43 billion. So just looking at the pure token release schedule, Solana is way more bullish than the leading layer 2s like Arbitrum. Even though so many people claim that layer 2s are superior technology and not heavily VC driven, it still has extremely large amount of tokens to be released. This difference is because Solana launched way back in 2020, and most of the early investors have already gotten their early tokens and taken profit, which means the majority of the sell pressure is behind us. To summarize, the FTX liquidation will not have a big impact on Solana's price. Just because these tokens are held by FTX doesn't make it more bearish than other large investor holdings. We still don't know exactly if the 1 million Solana tokens will be sold every month. The ideal scenario is for these tokens to be distributed to previous FTX users when they get claim on their asset, although the specifics will have to be decided by the bankruptcy claims, not by any project teams. Finally, let's get to my price prediction for Solana. As usual, we first have to figure out the supply of Solana by late 2025 during the bull run peak. According to the official tokenomics, by the end of 2025, the supply of Solana will be around 650 million tokens. Then for the potential market cap target, let me start with a bullish scenario. Unlike most of the other Solana fans claim, I think Solana is highly unlikely to make a new all-time high. You see, with Solana's previous all-time high at $250 and a supply of 650 million tokens by the end of 2025, this equals to a fully diluted market cap of $162 billion. To get a valuation this large, Solana will need to be a top 5 coin in the entire industry, and that brings some serious competition. The only other coins that have achieved over $150 billion in market cap were XRP in its 2018 peak when it reached the number 3 spot, and Binance Coin in its 2021 peak. Even BNB only reached $150 billion at its absolute top, and we're talking about the largest crypto exchange by far. That's why I don't think Solana can hit a new all-time high. Even if all of the adoption and positive news that we have explained all come true, I still think $250 will be a super optimistic target for Solana by the end of 2025. This will be a 13x return from the current price of $19. And frankly, I don't think this is very likely to happen. I give it maybe 30% chance. Next, for my bearish scenario, if Solana cannot find its use case within the next 2 years, it could start to drift into the lower market caps ranks to top 20 or even top 30. Just look at what happened to other layer 1s like EOS, Tron, or Tezos, which all had huge pumps in its first cycle, but could not make another comeback in the next one. If this happens, Solana should still go up in price just because of the bull run. but the peak market cap of top 20 coins is only about $30 billion. This equals to a price of around $45 by the bull run peak, or only a 2.5x return from current prices. So there you have it. My price prediction for Solana by the end of 2025 is between $45 and $250. I know that is a big price range, but that's what comes with Solana. I think it's either make it or break it, and there's a lot of different variances that could happen in the next couple years. My expected return is around $100 or a 5x return. I think Solana is still more productive than the fake blockchains like EOS or Tezos, so I wouldn't count it out just yet. But the previous all-time high of $250 will be super difficult to reach due to how hyped up Solana was in 2021. Now, Solana was in my portfolio since beginning of the year, but after this research, I don't think it's worth having anymore, and I am taking it out. Because with an expected return of 5x to only $100, I think it will underperform Ethereum or even Bitcoin from current levels. If you watch my Ethereum price prediction or Bitcoin price prediction videos for the next cycle, I am expecting an 8x return for Bitcoin to go to 200k and a 10x return for Ethereum to 15k. And I believe Bitcoin and Ethereum have much better chances of reaching these targets than Solana does in the next cycle. Okay, that wraps up today's video. Do you agree or disagree with me on Solana? Comment below if you are still holding SOL in your portfolio. Subscribe to the channel if you haven't already, and make sure to follow me on Twitter at VirtualBacon0x for more unfiltered crypto alpha. Also, go on virtualbacon.com to join our free Telegram group where we publish daily market summaries and altcoin alerts. And subscribe to our free newsletter where we cover deep market insights every week. Thank you for watching and see you in the next video.